East Africa accounted for 20% of all infrastructure projects across the continent in 2015, valued at $57.5 billion. A recent study by Deloitte East Africa says that 80% of these projects are in transport and energy. Here now is Mark Smith, Head of Infrastructure and Capital Projects at Deloitte East Africa. Give us a sense of the major trends when we are talking about construction in Africa 2015.
Well, thank you for having me. When we look at our newly issued Deloitte Africa Construction Trends Report, we're still seeing quite a large amount of investment going on within the continent-wide Africa, but more specifically within East Africa and within the country of Kenya. It's still a very, very attractive area for infrastructure development, especially around energy programs and new and innovative energy projects, as well as the basic transport of rail and road transport. We're seeing that the investment is continuing. We're seeing both the large donor funds being very, very significant in terms of helping to finance those investments. But we're also now seeing a lot of private companies looking to be brought in, especially around the questions around operations. So again, most of these programs, take 3 to 5 years to design and build. And then if we look at how we're going to operate some of these very significant assets, whether it's around rail, whether it's around solar power, where it's around wind power, typically we're going to have some private investors coming in to help operate those assets. Mm-hmm. And that's a very specialized area that I think we'll see a whole new realm of economy being developed around that. Yeah. So even though they may be owned by the government, a lot of the operation will be through private companies who have a lot of expertise and experience in operating these kinds of new assets that are coming on board within East Africa and specifically within Kenya.
So if we look at East Africa, most of these infrastructure projects are being approached from an integrated point of view. Tell us what you see in terms of the expected growth going forward when all of these projects reach maturity.
So for example, like the LAPSET development program, where that will be a corridor that goes from Kenya, Ethiopia, South Sudan, and some of the surrounding areas. Also with the standard gauge railway that goes from Rwanda all the way to Uganda, that'll be built over time. Those are helping generate economic growth, not just for a country, but for the economic corridor. Mm-hmm. And I think that's what we'll see really over the next decade.
You mentioned that the average size of projects is dropping. Maybe you can tell, was it a case of overestimation where governments thought they could deliver what they had estimated from the beginning, but then they are like, wait a minute, we need to review the projection and see what we can achieve?
So I think what we're seeing is the average size of the project is dropping, which in my belief is a good thing. Because what you must do is, every time you have a major infrastructure project that costs $1 billion or more, it's very, very difficult to properly package that, to have it financed. So what you need is to have these programs properly packaged so that we call they're bankable projects, that you can go out and get financing for these major investments. And so we must make them bankable, and that means more well-defined, probably a little smaller. Again, still very significant investments, $500 million or more. But that's what's going to be then attractive to some of the foreign investors to come in for those kinds of investments.
Mm-hmm. And talking about financial viability of the project, are we seeing some reviews whereby the government and the interested stakeholders want to know whether these projects will still deliver what they expected when they were starting maybe a year or 3 years back?
Yes. So I think on that will be a very, very important component. That are these projects delivering the kind of growth expectations that's required. Because that will then be dependent upon other kinds of projects that get built after that. So yes, the government, I think, is very, very serious about looking at those projects and making sure that they are delivering the kind of revenue generation and the kind of economic growth that was intended for it.
Now, looking at the macroeconomic space in 2015, stability wasn't one of the things that we saw. And of course, I believe this had some impact on the kind of ongoing investments. Maybe you can tell us what sort of impact was there. This year we're expecting some stability with the currency, inflation and all of that. And again, what do you expect going forward in terms of investments in infrastructure?
Right. So I think on that there's really, I'd say, two major issues that we're looking at. That's around liquidity issues, global liquidity issues, and what the kind of funding can flow in to East Africa and specifically within Kenya. But we're also looking at, for example, the currency trade, where you look at the exchange rate between Kenya, the US dollar, and other foreign currencies, where that must be carefully watched. Because right at the moment we've had maybe a decrease of maybe 10% or even more. So that creates quite a significant impact on the investment on big infrastructure programs. So that's something that we clearly are looking for and clearly looking at.